Good morning, good morning. How's it going, guys? Welcome, welcome, welcome. Well, it's a gorgeous day outside. Sun is up, blue skies. It's really beautiful here in Muskoka. And I hope you guys are doing well. Thank you for joining me this morning. We got some big moves, and today's a big day. We have FOMC minutes later this afternoon in about 3 hours or so. And as you can see, we're getting some nice moves in the market today. And I thought it was really important at this point to just go through all the major currency pairs as well as gold. We'll look at silver as well. And maybe oil, we'll touch upon that. And what's really important is to get a feel for what chart is in play. And when we talk about what chart is in play, we're talking about what chart is the one that is currently the chart that is in focus. Which chart is demand being created or supply being contacted. And that way we know what chart to be focusing on to look for these signals and just to get an overall idea of what is actually taking place in each of the markets. So we're going to do that today, and we're going to do that together. And if you guys have any questions, you let me know. But we're going to discuss it together and going to get to the bottom of things, okay? So again, welcome, welcome, welcome. It's nice to have you. Had a bit of an emotional morning this morning with the children as one of our little canary buddies passed away, but all's good right now. We still have another canary. So nice to get back to work and nice to have something to keep my to keep my mind focused. So we're going to be doing that today. And let's start off with gold. So if you've been following us and following the work that I do here, you'd know that we've been watching very closely what's happening on the monthly time frame of gold. And the reason being is because we have a major institutional area of supply that I was mentioning to you guys before, okay? A major institutional supply zone was created, price dropped from that area. It paused, and now we are getting that rally up right back into that supply area, okay? So this is big. This is very big. And the reason why this is big and what's happening right now is because we recently had price rallying up into this area of supply on the weekly time frame. And it touched the supply zone and started to get a reaction to the downside. Now, I was mentioning that we suspected this move to the downside was not going to be, it wasn't going to start from that area. And the reason being was because we knew that the monthly time frame was the one that was in play. Okay, this is why so important to know what chart is in play, because you know if we were looking for signals off of that weekly supply zone, we would see that there was no signals. And the reason being is because even though it was contacted, it didn't play out. Okay, so take a look here, right? On the monthly time frame, we have this here. I put this label here. The reason being is because this is the chart that we're watching, okay? It's yellow sign, okay? So it's like when you reach the street lights, you have yellow, red, green. Red is stop, yellow is caution, and green is go, okay? In this case, red is supply, selling, green is buying, okay, demand, and yellow is we're waiting. So we've been waiting on the monthly time frame for price to make its move all the way up to contact the supply. And so that's why when price was contacting the weekly, we were examining the 4-hour time frame because let's say there was no monthly supply, okay? Let's say the monthly supply didn't exist and there was just weekly supply. And, you know, we were suspecting reasonably that price was going to drop. What we would be watching for is a shift of momentum on the 4-hour time frame. We would have had clear demand zones being taken out, nice looking supply zones being created. and we'd be looking for shorts, okay? And so when price contacted that weekly supply zone, we knew that it wasn't a great looking supply area in terms of its formation. And we also knew that it wasn't the supply that was really in play because we were to be focusing on the monthly time frame. And one of the key things that we noticed, okay, that made us realize, yes, we have to watch the monthly, was that after the weekly supply came into play, we had this price action here, okay? And as you can see, yes, there was a demand zone that was removed, telling us that there was some short-term selling happening out of that area. When we examined the price action on the way down, it was very poor, okay? This is not what it looks like when the banks are coming in and shooting price to the downside aggressively. That's not what it looks like. And so when we saw the lack of proper structure, we knew that it was likely no signal being created, okay? So let's put things into perspective here. When we look at gold and we look at the positions held by the largest institutions, we can see that they've been recently adding to their long positions. And the reason for that is, you can clearly see, to cause price to rally up. Okay, rally up into what? That's the question. Well, we believe it's the rally up into monthly supply before the eventual drop off. Okay, now why do we think gold is going to drop? Okay, the reason why we think gold is going to drop is because they were massively selling gold just recently, and price is now coming into that area. Okay, that's it, because of that. Now, do we know for a fact that gold is going to drop? No, we don't know for a fact. You can't know anything for a fact, but we know one thing for a fact, that if there is certain type of price action that is displayed on the lower time frames off of that area of supply on the monthly, then we start to build the odds in our favor that price is going to do something that we expect it to do. So if we are expecting a move to the downside, then we're going to track the zones on the lower time frame to determine if they are going to be short-term selling or short-term buying once that monthly supply gets contacted, okay? So in terms of the chart in play, monthly time frame is the chart in play, but we're waiting right now. So right now, we're not to trade this chart, okay? Because supply has yet to be hit, and that needs to be done first before there's any type of signal that we have to watch for, okay? So monthly supply has to be hit. Next, we're going to take a look at the daily time frame. And as you can see, we have a demand zone down here, right here, okay? So you look at the CFTC data, you see buying. You look at the daily time frame, you see a demand zone, and now price is rallying up. So the important signal as to whether or not the banks are going to drop gold or continue pushing it higher is to watch for the demand area, okay? This is going to be extremely important. Once the monthly supply zone comes into play, if it indeed comes into play, and the way it's looking so far, it looks like that might happen, we're going to watch for a drop, okay? And FOMC could be the trigger for it, okay? So what we would need is for gold to drop what would typically happen with the dollar. Strong, right? Rally. So there could be an initial move after FOMC. It could be that they lure in retail traders to buy gold. I wouldn't be surprised by that. And if you think logically about that, why would they want to lure in retail traders to buy gold? Well, if you take a look at the CFTC data, you can see that they are long gold. And if price is going to eventually turn over from monthly supply, they would want to offload those long positions and eventually enter into short positions, okay? So could be a few things that are going to happen here. The bottom line is you're never going to know exactly what to expect, okay? But you can put the odds in your favor of what the expectation should be. So putting things into context, we have big news coming out in a few hours, and gold is about to reach a massive area of selling that was just recently created um, back, when was it, last year? Yeah, up there. No, a couple months ago, a few months ago. Okay. So we're going to wait and see. If there is a major drop, we're going to wait to see if they are going to produce the signal by removing the latest demand area that they created when price was rallying up. Okay. Plain and simple. All right. So remember, the chart in play is monthly time frame. So now that gives you an idea of what you have to wait for and the time frame of when things are going to play out. Okay. It's going to take some time, but let's continue to monitor this chart and see how this plays out. Okay. Next, we have silver. So silver, when we look at the monthly time frame, it contacted institutional demand. And with that, it's likely price is going to go higher. Okay. But if we go down one time frame, you'll see that we've also contacted institutional supply. Now, here's the interesting thing. You have gold about to hit a major area of selling. You have silver contacting a major area of selling. You see the strength of the move on gold surpassing the recent highs. And you look at how silver is making a move to the upside, but containing itself. Okay. The reason why it's containing itself is because of what's happening on the weekly time frame. All right. So I'm going to be watching this area of supply on the weekly time frame to see how it reacts. Okay. And this is why I have this chart as the chart in play. So for gold, we have monthly time frame in play. And for silver, we have weekly chart that's in play. So now it's about watching this area to see how price reacts from it. Okay. Unfortunately, on the daily time frame, we don't have any institutional demand zones here that we could be watching to provide a short signal. Okay. Very unfortunate, but the chart didn't want to produce it, so we're gonna move along and not look for short signals on this chart. Let's take a quick look at oil. So oil's been playing this sequence um, ever since it broke to the upside from the lows here to contact supply, to drop to demand, to rally up to the supply area here, and then back down. And now the momentum is starting to die down. Okay, we are between supply and demand right now, so we have a range situation on the daily. So we'll wait to see how that plays out. Okay, so let's take a look at the Aussie. And we've been talking about the Aussie for, well, specifically about this scenario recently for the last few weeks, few months, I should say. And one of the things that we were pointing out was how price contacted a major area of supply on the weekly time frame. And we were watching how the RSI was slowly shifting momentum. Okay. And so when we combine what we're seeing on the Aussie US dollar and what we're seeing on gold, it's giving us this correlation of supply being reached and price about to turn over to make a move to the downside. So we're watching this area here on the daily time frame for a move to the downside. Now, a lot of problems with this trade, okay? This is not a high probability Sherlock system trade. But the logic that we're applying here, that we've learned through the Sherlock analysis process, the logic that we've acquired over the years, is telling us that there's very good odds that we see a drop from this area. So I like to test different trades. I don't like to just trade the same thing over and over again. I like to learn and expand my knowledge of the markets, and how I do that is I apply the logic to different circumstances on the charts and I trade it. And I take what I don't know and turn it into something that I do know. And so, it's something that I've been doing over the years, and I've learned a lot by doing this methodology. And I always warn members, if it's an experimental trade or if it's a high risk trade, I always warn members of the risks involved in the trade. If it's a Sherlock system trade, I tell them this is a Sherlock trade. It fits all the requirements for a trade, and so we are going to take it. Okay, but this one is a little bit more risky because of these circumstances. We have a daily supply zone located out in the middle of nowhere. It's not as it's reacting off of a higher time frame area because we already had that reaction. Now we're getting the push to the upside. We're anticipating a reversal from this supply zone because of what's happening in other markets. But we'll wait and watch and see. Okay. Uh, so um, so let's see how this plays out. So when we look at the time frames, monthly's not really doing anything, not contacting anything. Weekly had supply that came into play. Price reacted to the downside. So in a way, this chart is playing out, and it is in play because a major supply area got contacted. Okay. Then we had price rally up on the daily time frame, contact some supply, remove it, produce demand, fell short of hitting the demand, but we still got the pullback nonetheless. Price rallied, and now we're contacting another area of supply. So this is the chart that I'm focusing my attention on, okay? Because we have supply in play, and we're going to see whether or not there is going to be a reaction to the downside over time. Now, FOMC minutes later today could be what causes the move to the downside. Who knows? All I know is that supply is in play, and if there is a bias, the bias is a move to the downside. Okay, so we'll see how that plays out. So chart in play is the daily because of the supply that's been contacted, but you could also look at it as on the higher time frame. We also have the weekly supply being contacted, so that is also in play. Okay, let's go to the euro. Nice push to the upside. So this was a long trade idea I gave to members a few sessions ago, and the idea was um, that they needed to take profits on short positions, and that was going to fuel a move to the upside. And you can see that's indeed what took place. Look at the positions, okay? They were aggressive. And so we've been seeing them decrease ever since, from highs of 247,000 down to 197,000 now. So this closure of long positions helped fuel a move to the upside, and they also added to their shorts as well. Sorry, I have it backwards. The closure of shorts is what fueled the move to the upside, and you could see here just a couple weeks ago we reached highs of 277,000. That was maximum size. That was an all-time new maximum size. So when we saw that, we said, well, they're either going to keep on adding short or they're going to close them off. And the chances of them closing them off were a lot greater than continuing to add them since we had institutional demand that was contacted down here. Okay, so that was the odds that there was going to be a move to the upside, and so that was the long signal expecting the move to the upside. And where did we expect it to go? To around this area before the major supply area on the weekly time frame was contacted. And so far, so good. Okay, we had a nice move. So what time frame is in play? Well, definitely this chart is in play on the weekly with demand being contacted, but we also have this chart in play right now, and it's in waiting mode. And the reason being is because we contacted an area of supply, and it could have used that supply to drop. Okay, when price contacted that supply, the institutions could have came in and they could have started selling and dropping price from that area, but they decided to not do that, and instead they are removing that area. So this is important because they're removing supply, creating demand. This is the chart that we have to be watching right now, okay? So if there's going to be a move up and eventually move down, we would be watching this area of demand that's just been recently formed to provide us with that momentum to the downside, okay? So pounds, kind of a big mess here. Nothing's really making sense here. And you look at the monthly time frame, look at what's been happening here. A lot of sideways action here. So not very high odds when it comes to any type of expected move. Chart in play daily. It was daily when we had previously some demand, but right now I would say that the chart in play would have to be the weekly with supply being contacted right now, and that's what we would be watching for right here. So let me just anchor that down like that. Okay, so weekly supply contacted. Oh, let me just move that back. Weekly supply contacted, chart in play, but I'm not watching this one for any type of trade at this point. Okay. Kiwi, not much going on there. US CAD, this was a nice one. We had a short signal from the highs here. And this was, let me double check it before I start speaking. This was from a closure of long positions. That's right. They were super aggressive with longs, and we said they're going to close off those longs. And that's exactly what they did, as you can see here, with the positions decreasing. Close off longs, which fueled a move to the downside, and this is what's been taking place. Okay. So this is not the banks coming in and shorting. This is them closing off positions. So it's a profit taking phase. Okay. So chart in play. Price came, tested demand, rallied, took out demand, took out this demand, created supply, fell short of hitting supply, and now dropping. So, and supply being created here. So I would say we should wait for this one. Let me anchor that. And also wait and watch this one because they did. It's a very high probability that they created some supply up here in the 140s. Okay, it's very tricky, the analysis here on the weekly time frame. We were discussing this the other day, but there's a good chance that there's some supply here, so I'll be paying attention to that. Okay, US Swiss responding to the downside. We're getting two basing candles on the monthly with major demand down below. So we got to wait on this one. Okay. We had supply in play. It got taken out. Major demand has come into play. So buying has been the major force on the US Swiss, which tells us there's a very good chance over the longer term, we're going to see price head higher. But we need to get that drop down into that demand area first. Okay. So we're waiting. Monthly demand in play, monthly chart in play, but we're waiting right now. And US dollar, Japanese yen, not much going on here. Price dropped. We saw the profit taking on long positions. It contacted weekly demand. So chart is in play, okay, on the weekly time frame with weekly demand being contacted. All right. Um, so any questions on that? Hello. FOMC minutes is non-event. FOMC decision is the main one. Yeah, so we'll see. Okay, it's going to cause some movement in the markets today. I've always seen movements from the FOMC. So let's just be patient and see what happens. Okay. Other than that, I think we're pretty clear. Okay. I think we're pretty clear on what's going on. Good. Good. All right. Well, that's it. I won't keep you much longer, my friends. I just wanted to go through those markets with you now before the FOMC minutes, and we'll see in a couple hours how price wants to respond to that. And now you're well aware of what to watch for. Okay, good stuff. If you want to learn more, you want to come and learn how to draw institutional supply and demand, and learn how to do the Sherlock analysis, which is basically the most advanced, in my opinion, form of supply and demand analysis. Come and join us, whiteoakfx.com. We'd love to have you. And if you want to just peruse the free material, come and join us on our Telegram channel. All right, my friends, good stuff. You take care, and always a pleasure. Have a good one. Take care.